Welcome back, ladies and gentlemen. The trading industry has more data than ever before, but data alone doesn't create growth. Understanding behavior does. In this session, we'll explore how brokers are using sentiment analysis, behavioral insights, and AI-driven intelligence to better understand trader activity, improve engagement, and create more personalized user experiences across APAC markets. Joining us here is Vince De Castro, Head of Marketing of Equity Trading, who will introduce his colleague and the session.
Thank you, Dushka. Hi, I'm Head of Marketing for Acuity Trading. We provide AI-powered market intelligence for Forex brokers, financial institutions, and prop firms that increase trading activity, retention, lifetime value to traders by giving them clarity and targeted information around trade ideas, sentiment, economic events, and so forth. Joining me is Giles Hodgson, account manager at Acuity, and we just thought we'd have like just a very casual conversation about some of the data that we provide and that we've seen in our platform that might be of interest to you, just in terms of trading activity, specifically differences between APAC and the European markets and the US. So it's a really light conversation. It's, but I think it'll be of interest. Obviously, traders today are bombarded with information. So everything from social media to influencers to Telegram channels to every news feed, there's a ton of data, and most of them do not know why, what they should be reading, what they should be consuming, and what matters to them before trading. And that causes delays, it causes hesitation, and it causes them not to trade because they're absolutely confused. So what we do is provide that data in a targeted, personalized way. So Giles, first off, when we were analyzing data for this conversation, one thing that stood out was how different APAC behavior was compared to the European and the US markets. What were some of the things that you saw that were of interest?
Yeah, absolutely. Thanks, Vince. So adding a bit of context around this, we are able to essentially track engagement across all of our client base. And this isn't, simply engagement as a whole. It's engagement, specifically according to the session. This might be the US session, this might be the European session, and specifically for today, we're looking at the APAC session. And on this basis, we're able to see, okay, what kind of interactions are we seeing based on the engagement of our tools according to the region. So what we're actually seeing, which is different to the European and US sessions, is around 70% of the engagement, at least on our content and our tools, is happening in APAC around high volatility, price moves, and market movers. And there are specific reasons why this matters and why it's interesting. It's because if we look at the European session or you look at the US session, typically there are more macroeconomic events, there's more context, high impact events that are available for clients and traders to trade. And there's also more market moving news. Even when there's the European session, there's US news coming out. So based on this information, what do APAC traders have? They have thinner liquidity, and they also have fewer economic and macroeconomic events to trade on. That's what they're looking at, is what happened and why did it happen across the other sessions. So for example, the US session, the European session, what actually happened during that session, and how can I take action? And that's a typical indicator of an APAC trader, is they're looking for conviction on trade setup specifically. High conviction rates, they move according to market movers and they act fast.
Yeah, momentum versus setup driven. Yeah, it's a good point, right? A trader trading in Singapore is different than a trader trading in the morning session of the New York opening. Another thing that stood out was gold. I expected FX pairs to lead, but gold dominated the attention. So what did the data show around gold trading?
Okay, so those in the know will understand gold is the most traded asset in this industry by a long way, and we see the same across all our sessions. High engagement on gold analysis, US, European, APAC session. However, what we're seeing is really interesting, and this is according to all sessions, is that traders don't necessarily convert from gold analysis to a gold trade. What they're doing is analyzing gold and seeing what this is telling us about the market, geopolitically, risk. They're looking at gold essentially as a sentiment and indicator in which they can then say, okay, what is this telling me about other assets in the market? For example, US indices or FX pairs, okay? A good example of this is actually oil right now. There's a lot that's been happening with oil for geopolitical reasons. Where we see high spikes in oil, we're seeing, you know, a downward trend in gold in many instances. And what this tells us is that traders are looking at the analysis and looking at this from a sentiment perspective to gauge an understanding of what else is happening in the market.
Yeah, and funnily enough, Bitcoin was another one that that one shocked me. Was very similar.
Yeah, absolutely. So Bitcoin is unbelievable engagement, huge engagement. But honestly, it's more around the fact that people are really interested in finding out what's happening in the crypto space, specifically around Bitcoin. Again, it's a matter of risk assessment. They're accounting for risk, they're looking for risk, and they'll look at Bitcoin, see where that's going, and it doesn't necessarily convert to a trade using our tools and analysis. They may go elsewhere to decide.
Yeah, high traffic doesn't necessarily mean monetization. Yeah, it's behavioral intent. The next one that was I thought would be good to talk about is what was surprising around what surprised you the most data around JPY?
Yeah, this is an interesting one. So we've looked at Bitcoin, and now we've looked at gold. It's a very different take on the JPY pairs. Specifically from our data, we've looked at Euro Yen, USD Yen, and there may be lower engagement on our tools on those specific assets. However, there's high conviction and high conversion to trades. So, and the reason for this is APAC traders are looking at what's happened in different sessions. The US session, USD JPY, European session, Euro JPY, and they're looking at how the asset has moved, and they understand this asset, and thus they're trading it quite effectively and quite regularly.
Cool. Okay, so getting away from the trading instruments, the next one I think that the data showed some interesting stats was around why do you think brokers misunderstand engagement?
Yeah, absolutely. So for all those marketers out there, there's a key difference between engagement as a whole and context around engagement. So a lot of people in marketing might say, okay, across all of our traders, we've got high engagement, all right? But this doesn't necessarily explain the context of engagement. You know, for example, a trader in Singapore does not have the same trading habits as someone in, for example, the UK or in Europe, okay? So when we're looking at engagement, we have to understand that there is certain context alongside that. Take, for example, the economic calendar, right? An economic calendar, we're all familiar with that. We're looking at high impact events. Most of the context and most of the engagement around our economic calendar is happening in the European session, right? So what this tells us is we shouldn't be providing insights specifically around European high impact events when we're engaging with APAC traders. So we have to understand in the form of context what APAC traders want to see, when they want to see it, and why.
Yeah, that's a good point. I think the biggest thing that we try to do at Acuity is we don't want to just say what's happening in the market. We need to explain why it's happening and then provide insight into what to do next, right? So, so timing also showed up clearly in calendar engagement. What did we see there?
In terms of timing. So so again, it goes back to the point of, when we're looking at US sessions and European sessions, this is where the majority of the, the high impact events are coming out. And then when we're looking down the line at the APAC session, they don't have the availability or the context around these high impact events. And when these high impact events happen, the market moves effectively, and then they have to act on this during their own session.
Yeah, that's correct. I think lastly, I think one of the things I wanted to discuss is, looking ahead. Where do you think this goes over the next few years in terms of trading platforms becoming more adaptive, just generally?
Yeah, absolutely. I think this is the most interesting topic and the interesting question is for all the traders out there, we're all used to, trading with the same platforms, at least legacy platforms. We've got the likes of, MetaTrader. We're all familiar with these platforms and they are fantastic. However, with the age of AI, there are more tools than ever. There's a lot of noise out there. There's a lot of data that traders can engage with. However, the issue they're having, at least, is how to deliver this context and this content to the traders effectively within platform. So I think what we're going to be finding is platforms, super apps, web traders, for example, where all the context, the why has this asset move, and also the direction of this asset and personalization around specific asset classes as well. And essentially, it's an area in which a trader doesn't have to go anywhere else, but stick within platform.
Yeah, and just to follow up on that from a marketing standpoint, is personalization is obviously where things are going that's going to separate Forex brokers moving forward, right? So it's more of once you can start to diversify your traders in your database and you understand what types of traders they are and categorize them, it's more giving them the right message at the right time. So a gold trader doesn't want the same content that an oil trader or a Euro USD trader is. So from a Forex broker standpoint, personalization, sending them alerts when gold is on the move. That's one of the things that we do at Acuity is that we have our AI scours the price movements of instruments all the time, and as soon as there's an abnormal movement on an instrument, we then track it for 24 hours, every 10 minutes, and we'll notify sort of, any announcement, anything in the market that could signify why the instrument's on the move, and then recommendations on what to do next. So it's a big deal in terms of keeping traders engaged where they want to consume content and when they want it. Is there anything else that you wanted to finish off with in terms of data before I ask if there's any questions in the crowd?
Yeah, I think it just goes back to what you just said, Vince, is, personalization really is key. I mean, for those of you who are traders, I mean, how much personalized content are you actually getting at a brokerage? Yes, there are insights, you can find insights from their website, sometimes in platform. They can send you static emails. They can, you can even effectively sometimes use their social media, Telegram, to gain insights. But how much of those or how many of those insights are actually personalized to you as a trader who could be one of thousands? So that's what we're working at Acuity at the moment, is to effectively personalize the content to both the brokerage and the trader, so that when the trader goes into the platform, it doesn't matter what asset class or asset they're looking to trade, they can always find the latest insights personalized to them.
Yeah, excellent. That's very good. Anybody have any questions or anything that they would like to ask around Acuity or the data or the markets? No? Okay, well, sure. Thank you.
Hello. It was really nice talk. If we see the AI in last 1-2 years, a lot of stuff has changed. And when new stuff is coming and a lot of problems, new problems also coming. So what are the big problems or the data or complaints or the stuff you are getting from the traders in these last 1-2 years, which are raised because of AI, where we can see as a broker have some potential of improvements?
So obviously we're on the other side, right? So we're providing data to brokers. So when we say AI, we're not using like ChatGPT or Perplexity. We have a data science team that's been using large language models and NLP for years. So it's constantly scouring the internet looking for data points and aggregating it. So it's not really making recommendations. We have analysts that actually make our recommendations. So from an error or hallucination standpoint, that's not really the case. What we're looking for is abnormal price movements and then trying to explain why. Whether it could be something like the CEO of a company resigned, and that's why the stock, so the sentiment across the internet is showing downward trend on a stock. We want to get in front of that trader right away and say, Apple stock is on the move down, and we believe that this is where it's going to go, and you've got 24 hours to make this trade in order to get into that profit range. These kinds of things. So we're not just using AI for prediction. But do you have anything else to follow up?
Yeah, and I think, on that point, a lot of the context around the AI that we use is not forward-looking, right? So when we utilize the AI in our system, we always bring back the action to our other data sets. So if we're looking at our AI news feeds, for example, we look at multiple sources, we find out why the asset is moving, how much it has moved, we summarize it, and then we integrate it across all of our other data sets saying, okay, are you interested in looking at an analyst rating? Are you looking at sentiment? Are you looking at a personalized trade idea? However, when it comes to the AI usage, we're only summarizing why it could be moving, and here are the other asset classes and other technology that can be used.
Be affected. Correct.
Okay, great. So, is there any most common problems getting from the traders, like how they were expecting, and how is their experience? The most common problems, like
yeah. Well, so again, I guess actually you work directly with our customers more, so you probably would have the feedback.
Yeah, I mean, I guess it's more of a question of what are they finding, what problems are they finding in general, trading, or is it around the context that we're providing? So I think that the issues that traders have at the moment is simply noise. There's so much information out there that traders often get different context around a specific asset. They might have 10 different feeds, 10 different trade ideas across gold, for example. So this is the issue they have. However, one thing that we focus on in particular is simple UI and a lot of context around why we're actually providing the data that we're providing. But generally, there's also the flip side of this, which is there's no data. A lot of brokers, are providing
Correct.
nothing. And I think for anyone who's started trading for the first time and opened up a trading app, it can be any trading app, and doesn't have any data available to them, how long are they going to last in this market, and how long are they going to stay?
Yeah, it's a good point, because one of the amazing stats in Forex in general is how many accounts open an account, fund the account, never make a trade, and then close the account, because they just simply have no idea what to do. And without the right information being given to them to give them the confidence to make that first trade, that's everything. And I think it's like 40% untraded accounts that withdraw all their money. So it's a massive, massive challenge.
And going back to that, in terms of traders having problems, they're also very savvy. It's quite common that a trader will open 10 different trading accounts, compare them from withdrawals to what kind of insights they have, and then they'll stick with one they prefer, essentially.
Good point.
Thank you. Thank you so much.
All right, well, if that's it from everybody, thank you for attending.
Thank you.
It's been a pleasure.